Hi, welcome to mediatorpodcast.com, a podcast and video series about mediation, negotiation, and collaboration. My name is Melissa Gragg, and I'm a valuation expert and divorce financial mediator in St. Louis, Missouri. So today we are with Rosalia Labate, and we're doing this series about myths in divorce. But she's located in New York, and she's a certified divorce financial analyst and a certified public accountant. So she also provides services such as financial forensics, lifestyle analyses, and business valuations. And we've been talking about these myths around the financial aspects of divorce. And one of the myths that we're going to talk about today is that a business valuation is going to cost you 5 figures. And Rosalia, is that a myth, or is that really should be a legitimate concern?
I am actually going to be doing a presentation to the New York State Council of Divorce Mediators in the spring. And this is one of the myths we're going to be talking about, because so many people think it's going to cost $10,000 and up. And, New York, they're even throwing around $25,000, which is crazy. There are various levels to business valuations that generally aren't disclosed. So depending upon the type of business valuation that you're getting, it could be so much less expensive. What do I mean by that? So for example, and it depends on the level of trust that the couple has with each other, especially when it involves mediations. If the basic level where the couple trusts each other, they just want to do a review, there's some familiarity with the financial circumstances, I can just look at the tax returns and kind of come up with some numbers that could satisfy both in the marriage. In the second level, we get a little bit more deeper, maybe look at some of the financial statements, maybe the spouse that's not involved in the business doesn't really know much about the business, has heard snippets, wants a little bit more in depth. So let's look at the financial statements. What else could we look at? Then that last level is when you're doing a full detailed report, where I'm coming in, I'm looking at the tax returns, the financial statements, the underlying books and records of the company, everything. I'm looking at, it's a full detailed report, multiple pages, not generally necessary in a mediation. I don't know what you see, Melissa, but in terms of a mediation, you may or may not need it. I know when I've been appointed by the courts, that's what the courts require here in New York.
Yeah, absolutely. I mean, I think that what we're seeing in mediation is people are not hiring the experts, and they're typically being told to not hire the experts by the mediator or by the other attorney. And they're saying, "Oh, let's come to the mediation in good faith. And, we don't need a business valuator. We can just look at the tax returns and, talk to the business owner and talk to the spouse, and we'll figure it out." And the reality is, you got to get, and they'll say, well, it's going to cost $20,000 and we don't even know if the business is worth anything, right? I think that what's happening, and in my space, my competition is in bigger companies, bigger financial firms or accounting firms, and they are charging a minimum to start 25,000. And then they say, to get to, and these are even a national, we've hired a couple national valuation firms recently, and the starting price is 25,000. That's not going to get you anything. That's just the retainer. In order to get a number, or, maybe even a one-page, simple analyses, a preliminary value is 50,000. And then if you have to go to trial or further, it could be 100,000. And those firms are specializing in the fact that they're not going to take any cases that would be less than that. So you flip over to mediation or even collaborative divorce. And I think that because it's a different container and it's not necessarily the courtroom, which it could still lead to the courtroom, There's ways, like you said, that we could do things a lot simpler. But the simple isn't that the analysis is more simple, it's that you're getting along in some capacity, or you're freely exchanging information in order for that third party valuator to even work in the middle of you. You know, like hiring one expert to provide you with a preliminary value is very uncomfortable in some capacity, because like I can't control the value, but it also gives you a perspective that could be really realistically closer to the real value of the company, because the valuator is working in the middle and they're really representing the company, and they're not then biased by either side per se, right?
Right. Well, I think one of the other things that's really important to take into consideration is that when you have that expert that's doing the valuation during the mediation process, there are things that are discovered that affect the mediation process itself. What do I mean by that? For example, I think in 100%, I know, in 100% of the companies that I have valued, there are personal expenses that are running through that business that is not necessarily being captured unless you have the financial expert come in and work on that valuation and find that information. That goes right to lifestyle. That goes right to your budget. That goes right to the bottom line of maintenance and child support. I don't know.
Well, and that's really what you're paying a neutral valuator to be, or any valuation expert to start to understand. Now, when we're working in the middle, or we're trying to facilitate it through like a valuation mediation process, what we are typically doing is saying you need to disclose 24 months of bank statements or credit card statements for the business that maybe that one spouse didn't have access to. But we're then putting the responsibility on both parties and both attorneys potentially to look through the information, to identify, oh, look, there are some personal expenses that, you know, because they could be on a bank statement, but they're not being booked into the financials, and they're being booked as a distribution. So they're accounting for it properly. It's just that people don't understand the cash flow situation of the business. But even if we identify, like, let's say, okay, the easy ones are you run your car through there, you run your cell phone, maybe you run some rental, like you own a building, you're running some rent, whatever it is, we can easily, if it's identified even in the mediation, and we're like, hey, do we agree that it's $20,000, you know, like that you're running through? Hey, let's adjust it in the business valuation. We don't care about the IRS per se. Like, we're not trying to say that you should have done your taxes different. We're saying that from a valuation standpoint, if somebody were to buy this business, they would not have those same expenses. They wouldn't drive a Maserati and run all of the gas as well as the payment and insurance and then two other cars through that business. They wouldn't do that. So we would have a different cash flow for fair market value, right? So we can deal with it, but it, if you want to make that not be an explosive issue, you have to start realizing that it's an issue that we always deal with in a business valuation. You know, it's not that they defrauded the IRS. It's not that they did anything incorrectly. I mean, there's ways that you can take accelerated depreciation. That's not a cash item per se, but it's a tax situation. So I think that that could lend it to be more expensive. Really, the most expensive piece of the valuation is the report. You know,
Right.
so if you're working in mediation and you can be presenting it, or you can work with somebody who's like showing you the numbers and talking you through the numbers, you might get to the end, which is a number that is you should consider in the mediation, but it's not actually realistically the number that you have to choose for the mediation. You guys might say, "Oh, that makes sense, but I don't really agree to that, and I would agree to $20,000 different number." okay, I mean, there's a range of reasonableness. A lot of times I'm showing people like, it's not just one number, it could be a little bit of a range. And that usually makes people a little bit more comfortable in negotiating that number, because it still could be a negotiation, right?
Right. And that's, I think, what's so wonderful about mediation is that depending on the facts and circumstances of the case, you can, as you said, give a range of numbers. And, you can also, like, there's time to explain to the non-owner spouse what it all means and allow the non-owner spouse to digest that information. And a lot of times they come back with some really good questions. And look, divorce is right up there with some of the most worst things that can happen in your life. And you've really got to be, I think, you really have to understand everything that's going on so you can make an informed decision, especially if you've been in a long-term marriage, because this is the rest of your life. It's the rest of your life. Why not have that financial person on board so they can help in both circumstances? I've actually had a financial advisor who was going through a divorce, and he met me after it was over, and he said to me, I wish I would have known you when I was going through the divorce, because my wife needed someone to explain to her what was going on with the valuation. I still think she didn't understand it.
And I talk to a lot of business owners about, the better that your spouse understands the situation of the value and sort of not agrees, but agrees to fundamentally how it was developed. And a lot of times that means working together and walking through this process, and the process of understanding the valuation, that it's based on cash flow, like, is really important. Because like we have clients all the time that they come in and they're like, we're living this fabulous lifestyle, yet my tax returns show that we're not making a lot of money. We're only making like, $200,000 per the tax return, but we are living in $1 million mansion. And how is that working? Well, and if you look deeper into some of the information, you're going to know exactly how it worked. Is that you maybe didn't have the taxable income this year, right? You'd have to look at more in the past of what happened, but you probably had distributions. And distributions from a company is only going to show up on your K1. And if you're reporting all of your income through another tax return, a business tax return, and you're not looking at the K1s, you might be like, well, our taxable income is really low, but the distributions were the cash that you were already taxed upon. And so that becomes even a confusing situation as I describe it right now, even if you understand finances. And so I think that what everybody needs to understand more is that a financial expert and a specific business valuation expert is in the room for mediation, because nobody in the room understands what we're talking about. Nobody understands what we're looking at. So we're describing it not just to you, the outspouse, or the stay-at-home person, or the spouse outside the business. We're actually explaining it for the business owner. They do not know how this is done. We're explaining it for the mediator. The lawyers are even like acting like, oh yeah, we've done this before, but yet they don't really understand these nuances of like, well, describe to me distributions again. Yeah, go look at box 12D. Is there a number in that K1? If there's a number, that is money that's never going to show up anywhere in the tax returns that you reviewed. And that alone is a big issue.
Well, yeah, and sorry to interrupt, but I don't know about you, but half the time there is no K1. Like, where's the K1? What do you need that for? Oh, they don't. That's again, to your point, no one understands the value in that K1, and there could be those distributions, and they may not be going through the couple's bank accounts.
Correct.
So how are we finding it?
Yeah, and once we go through some of the bank statements and a check, like if you can't rely upon the tax returns, because a lot of times they are manipulated in some capacity. And if you can't rely upon them, then we have to go back to either the internal financials, which would also be manipulated, or we're going back to the bank statements. And once we go back to the bank statements and we start to see certain things that happen, we start to see that, maybe there is additional income that wasn't reported. Maybe there was additional, because if they're fudging on one area, they might fudge on the other area. But in all of this analyses, we're also potentially looking at how they've written off debt, or they've done things that seem like income or debt situations, and they're kind of just tax loopholes, tax ways of getting around it. And everybody thinks, well, I can read my own tax return, kind of. I think the biggest issue is going into mediation without a financial expert in the room with you, or if you're going to mediation and you're not bringing a financial expert, then you better have an entire settlement agreement that's already in play before you go into mediation. So our recommendation is, before you go into mediation, like a week before, you're providing a settlement offer to the other side. And if you don't have enough information to get to that settlement offer, then you're going into mediation to get discovery, and you're going to get documents, or you're going to expose the fact that they are not providing you with information. But without a financial expert, sometimes mediation can be a waste of time.
I agree with you. And I realize that when, people get involved in mediation because they want to save money, right? They don't want to pay attorneys. They want to try and settle it to maintain the marital estate, which makes perfect sense. You don't want to fund an attorney's child's college years. But then you also don't want to cut yourself short, right? This goes back to, the attorney knows everything. The attorney was not trained financially. So, and we've kind of gotten away from our myth that it's going to cost you 5 figures, as you can see. But it's true. You need that financial person on board, even with a mediator, because the mediator can't be the be all to end all either. So it's
and the mediator typically is not even trained in financials as well. And so one of the things that you might see is you go into mediation and everybody says, oh, let's just try to do this one time, and then you can hire an expert afterwards. At all times, typically, if you're in mediation, hiring an expert and you're in mediation, and their job is to provide you some analyses for the mediation and or to present it to everybody, that is going to cost you less. That is one of the only ways to get into a fee that is less than $25,000. If you're going to go through litigation, and or somebody's going to fight about it being separate or hiding money or any of these things, that's where you're literally just going to eke up the bill over time. And then you're updating and you're updating and you're updating the value, the property statement, the income and expenses, like all of this can be done in a more mediation environment. But you also have to realize that, you have to find professionals that are willing, because again, if I can easily just take 25,000 for it, why would I do anything less? Well, you're getting into a situation where you have to find people that want to help you as a couple, or they want to help you individually in this mediation process. And that's not everyone per se. And you have to have a way that you do it in mediation that protects everyone, that gets them through this process in kind of a relatively comfortable fashion. But the mediation as itself is the Wild West. And so then it depends on who your mediator is. Who are you bringing attorneys? Are you not bringing attorneys? that for the most part, if you're the out spouse, it's probably going to be a good situation to have legal representation and a financial expert so that you're going into mediation. But even then, if you're going into mediation and no one's prepping you, like, we don't go into mediation blind ever. We go into mediation knowing that the mediator is the pawn. And I know this is going to be painful for people to hear, but the mediator is the pawn in the settlement discussion, right? So if we don't come into the mediation with settlement numbers in mind, and then we're just clearing up some pieces, what are we there for? To hope that the mediator comes up with some complex financial structure to settle this? They don't have that capacity. To think that the lawyers have a way to financially settle this, it's almost malpractice for everyone in the room to suggest a financial conclusion without giving you the financial advice and pawn off on that. And then if you agree to that settlement, it could be that you've sealed yourself into an agreement that if you find out later you didn't have all the information or they hid information, and I'm telling you, this year or last year, we had 3 different cases that after a mediation, they found out that they were completely lied to. They had a lot less ways to go back and fix that situation because of how they agreed to it and because of how they left out a financial person in the process. And
yeah, I've also been involved in post-divorce financial work where there wasn't a financial expert involved. And I actually had one client where we went back to court 6 years in a row because of the way the mediator wrote the agreement that both parties signed off on.
Because they didn't know any better.
And it didn't have to be that way. Yeah, it didn't have to be that way. Did not have to be that way. As a matter of fact, last week I was with another client who's trying to settle a matter. And the mediator put so many conditions on getting money. There has to be a better way. There just has to be a better way. You get divorced so you can deal with that person as little as possible when the divorce is over. Children, of course, tie you to each other, but do you want the financial to tie you as well? Because there wasn't that financial expert involved in the mediation to begin with?
Well, and I think, and this is just obviously biased, I think that mediators should be financial mediators. I believe that the best mediator would have a financial understanding, and then each person is bringing in attorneys that have the legal understanding. So if the legal is gray, we can financially figure out where the number would be in the gray. So it's either a separate asset or typically it's a commingled asset. So a separate asset isn't totally separate. There's a portion of it that's separate and marital. Well, if you have that issue and the attorneys present those issues to a financial mediator, the financial mediator is going to be like, well, let me look at some of the tracing analyses and simple tracing analyses that actually the court does not prefer. The court prefers for us to do a $50,000 analysis that is to perfection, as opposed to a $10,000 analysis that is good enough, right? Like, it's good enough, judge. Like, it's close enough. And we can't get more specific in some of these areas. And so if you had a financial mediator, they could give you on the sliding scale of the value where it would be based on your theoretical legal issues.
I agree. I completely agree. That's why mediation anything goes in mediation, but there has to be some structure. There really has to be some structure, and you have to have all of the relevant professionals on board. Otherwise, it's going to cost you down the road.
Well, and just like I think you need to talk to your attorney about cost and what to expect, not only like that first retainer could be $5,000, $10,000, But like, then you need to ask them, are you going to continue to charge me $5,000 a month? Because that's probably the reality, So it's also talking to the valuator and saying, okay, I can't do the 20,000, but what could I do for 5,000 or 10,000? And then you're talking to the valuation person and saying, okay, if I'm going into mediation, what can you provide for me? What can you help me with? The most economical is like a preliminary valuation or a property statement or a settlement agreement. Those are actually going to be beneficial in the mediation, but you could talk to somebody and say, like, what would that cost? And kind of get it scoped so that you're taking it in these tranches. Because then if you need to go further, okay, we need to go into the court system. But also finding somebody that will work in mediation and then go to litigation, because that's most of the people who go to mediation don't want to be in litigation anymore, right? Like, that's the whole reason that they're over there. So finding somebody that is comfortable in both spaces, and even finding a mediator that has more than 5 or 10 years of experience. And I know that sounds crazy because mediation really is still in its infancy in some capacities, but it's the same with valuation. Like, the way I did valuations in the first 10 years, probably not as good as the last 10 years, right? Same with mediation. There's a lot in the financial world that you have to figure out how to work unbiased with people and giving an opinion that is very difficult. In some cases, people would say impossible to do, and I would disagree. But how are you helping people in these capacities to stay away from that five figure valuation in New York, right? Like, what's it costing in New York to do this kind of thing?
Well, I think what I do and best practice is I get involved early on, and we will generally have a four-way with the mediator and the couple, and we talk about all of this. What are the couple's concerns? What needs to be done? What's the level of satisfaction that you need from that valuation? That gives me all the information in terms of how far to take that valuation. And especially in mediation, you want both parties to feel as comfortable as possible and know everything that they're getting involved in. A lot of times it's very difficult to say, hey, this is going to take 3 sessions, this is going to take 20 sessions. Very, very difficult. But I think that if all the financial, legal, mediator couple are all on the same page, and we also do memorandums of understanding, like at the end of each session. So again, everybody's got an idea of what happened during the last session and where it's going moving forward. Very similar to the collaborative process.
I mean, I think that you've already talked about a couple really brilliant ways to handle it. So if you're considering a mediator, to also loop in, and there are more financial mediators kind of coming about, around the country, that I would say, as long as their deeper knowledge is in divorce, they can kind of figure out some of the mediation as well. But having that group, having the transparency, I think, in this situation helps everybody be more trustworthy of the process, and that knowing that the financial person is going to present all the financial issues, because that's part of our role, is to be like, I can see there's going to be some issues here. Let's talk about them in a more concerted way. But then also the memorandum of understanding after each session, like that's a good little tactic, because then you're keeping everybody sometimes a week or two. I do like to set these things up so that we're meeting once a week or once every other week. A lot of times at the beginning, every other week is good enough, but it keeps the pace kind of moving along when you have a lot of significant issues. Those are some amazing things. So I think we've kind of covered this myth. Do you think you have any other parting thoughts about what somebody should do if they're in the planning stages of their divorce?
I think it's really important to talk to the financial professional. I mean, I've acted as both a financial mediator and as the financial neutral in the mediation process itself. And again, everyone's area is individualized, everyone's needs are on a case by case basis. So seek that information. I will take a phone call and I won't charge you. I'm sure, Melissa, you would do the same thing, so we could do a 15-minute consult and see what your needs are and whether or not I can help you. But I would bring the financial professional on board. I would look to the legal professional as well, so that the more knowledge and the more information that you have, the more empowered you are at the end of the day.
Absolutely. And I think that for the most part, a lot of states are moving towards some required mediation. In your case, if you have children, I would utilize that and not necessarily go with a court appointed mediator, which they're not always doing, but to go with somebody that you can choose and find somebody that has the background of the main issues in your case. So if you have main issues are children, main issues are finances, get those professionals also involved and understand what they can do. And even for that first 2 hours, try to get into somebody that could be a more long-term situation, because it will be easier for you to just stay involved with that person. And then you can bring in other people. But if there's a financial issue, and your spouse does not want to move forward, I think you have to get the advice that you need, because that is a game changer. If there's a business valuation, it's a game changer. That's where you could leave hundreds of thousands or millions of dollars on the table, and no one in the room could know about it. Or if they know about it, they're not going to tell you about it. And that's where you have to be, make sure you're advocating for yourself by hiring the right people to be in the room, regardless of what everybody is telling you. So go instinctually. So I appreciate you, Rosalia, and we'll be back for another myth very soon. And if you have any questions or you want to reach out to Rosalia, here is her website, and she's got her phone number and email address linked in here. So reach out to any of us. Yes, I offer, even on Valuation Mediation website, I offer a 30-minute consult for pretty much anybody, especially if it's an attorney that knows that they have a case and they want to kind of talk to their client about the whole thing. So that's usually a good place to start as well. So Rosalia, I appreciate you, and we'll be back again for another myth.
Thank you so much, Melissa.